Hi traders and investors, welcome to today's The Steady Trader YouTube Live. Well, we've been talking about the weakness in large cap technology stocks over the past week and a half or so on the channel here and there. We've talked about this also technically. We've talked about how important these large names are for the broader stock market. And today I want to show you why this time it's a little bit different. And before you get too concerned, what I'm going to show you is the way that technology stocks, large cap tech, basically the NASDAQ 100, they're acting relatively weaker versus the S&P than they did in February when we had a sell-off. And this actually is important. Basically, we have less sort of leadership in the market of meaningful, important stocks now here in the second half of March 2018 than we had in February. So that, for me, that basically means that stocks could fall lower. Again, this is not, I'm not calling this doom and gloom, but for right now, we definitely want to respect that, at least for the next days, maybe the next few weeks until we get into earnings season. So let me show you a chart. It's a very nice chart that's going to put a lot of perspective on this for you so you can kind of get your head around all of this. And by the way, if you're not using relative charts yet, I would highly encourage you to start using them. So let me flip around the camera. And here's a very nice and simple chart. There you go. And you can see what I did here is I took the NASDAQ 100 and I divided it by the S&P 500. So the QQQ divided by the SPY. As a result, we get this relative chart. And you can see there was a big relative strength that started by large cap tech stocks all the way until basically last week or at some point last week. So large cap tech has been outperforming. Now, if you look at this a little bit more closely and look where you're putting the cursor, that is the February pullback in the broad stock market. And here too, you can see large cap tech did actually show some relative weakness versus the S&P 500. However, all of this took place below resistance, right? So technically speaking, you can apply some basic technical analysis here. Now, on the other hand, we've rallied so much further that the relative weakness now is more concerning. Not to mention the technicals of most or many of these large cap tech stocks, from Apple to Facebook and so on. Again, that's not to paint a long-term bearish picture, but I'm trying to show you that the relative weakness we're seeing now, in other words, there's less leadership by large cap tech. Now, if you look at the S&P 500 itself, just quickly, in very simple terms, you can see that here we made a lower high, and if we now have a quick look at, say, something like the NASDAQ 100, all right, the QQQ ETF, you can see that here we have some very well-defined downside targets, probably the 100-day moving average, and ultimately, if this weakness does persist, it wouldn't be too far-fetched to believe that we can get back down to the 200-day moving average. More concerningly is really the weekly charts. If you look at the weekly chart of the NASDAQ 100, and I'm going to make this a little bit larger so you guys can see, we really had a classic breakout, fake-out move a couple of weeks ago. Then we had an exhaustion rally last week, and now we're seeing follow-through selling. So again, doesn't mean we have to fall apart from here, for the next, 3 quarters or 3 years for that matter. But I do think that the path of least resistance, because of what I've just told you, this relative chart particularly, does seem to be down here for another trade. So that's what I wanted to go through today, folks. I hope this was helpful. If you enjoyed this, please give us a thumbs up like. Tell everyone you know and subscribe to the channel, and I'll see you guys in the next YouTube Live.